This be something that's put on hiatus until the pandemic is over?
Well, I mean, the problem with these kind of programs is that they're intentioned well, and they're designed with the idea that they're going to somehow or another minimize income distribution problems within the economy. The reality is they tend not to work as they've been expected to or as they've been advertised to. I don't think putting them on a hiatus would make any sense. It's too hard politically to get it done. But expecting any kind of major shift in the distribution of income or tax revenue generated by increased employment, increased wages is just not something that's going to be validated in the data.
Lily, I know a lot of the proponents of minimum wage, and I know you're among them, say that there's no evidence that it hurts workers. I guess a different way to ask the question, though, is do we need it federally or state by state mandated, especially at a time when a lot of companies, the biggest employers in this country, have taken the lead in raising their wages? Walmart, Amazon, others come to mind. Is it unfair to smaller players to make them compete against the bigger pocketed guys?
I would say that one thing we've learned from this pandemic experience is that putting money in the hands of low-income people keeps the consumer economy afloat better than anything. One of the things that minimum wage does really well is it drives spending up in consumer spending. One of the biggest categories of consumer spending that it drives is actually restaurant spending. So, getting people change their spending habits when they get a raise, and one of the components of that is out-of-home eating spending. Nationally, I think it's really important to focus on a minimum wage. We can continue to let states and cities, chip away at this, but it's expensive to live everywhere. There are differences in cost of living, that's for sure. The real estate market is different in different parts of the country, but oftentimes you have to compensate for that by buying a car or spending more on gas. And what it sort of shakes out to is that there are a lot of parts of this country that are very expensive, and there's no part of this country in which $7.25 is a way to make a living.
Right, although $7.25, again, in many states now we're talking about the minimum wage going up to double that. So that's the federal minimum, but only I think in Georgia and one other state is it below that number. Steve, what would your response be to all of that?
Well, again, as I said, it's all very good intention. There is no data that proves that it really drives anything from a consumer standpoint. There really isn't much data that shows it does anything in terms of income distribution. It's a well-intentioned program that doesn't have the intended result that it wants. This is the point that I've made before. It doesn't really deal with income redistribution issues. It doesn't really generate additional tax revenue because it doesn't really generate increased employment, because companies in a world of excess supply can't raise prices. And if you can't raise prices and you're in a position of having to pay higher real estate taxes, which a lot of these small businesses are having to pay a higher cost of income and insurance costs for their employees, they're faced with a problem. I'm being squeezed on my cost side. I can't raise the price side. I've got to squeeze. Either I go out of business or I wind up finding some way of circumventing the problem by paying fewer workers. And that's really the thing that's happening. Just take a look at, your average McDonald's in this country now. 5 years ago, you walked up, there were 3 or 4 counter people waiting there to take your order. You walk in now, there's 1 counter person and 4 computer kiosks. Right there, several jobs just gone. And this is just going to continue the process down there. All it's going to do is accelerate the process of substituting capital for labor.
Shepard Smith here. Thanks for watching CNBC on YouTube.